Hey traders, welcome to Charts and Coffee. Happy Thursday, everyone. Hope everyone's doing well as we are going through this this bank holiday shortened week. No lack of FOMC speakers, and we've been seeing a lot of adjustments that the indices and the treasuries and the currencies have been making in light of some of the comments that different FOMC speakers, whose names are not Jerome Powell actually, have to say about their expectation for inflation and what that reaction would be for rate cuts. Now, remember, a lot of, we're taking a look at the NASDAQ on the daily time frame here, take a look at the S&P, we'll take a look at the bonds. When we look at the way in which yields have been going down, which is an overall move higher in the bond futures, the way the NASDAQ futures have been heading higher, S&P futures, of course, SPY, QQQ, TLT, the general movement has been up, and that's because the general expectation for March, May, and June has been for a quarter point cut each one of those meetings. Now, the higher the probability is, the more that the column, when we take a look, and I know a lot of you know how we decode macro. We've been talking about this a long time. There is a lot of terrible advice parading around as macro. And what we want to do is remember, we can make this really easy. We can make this very simple. And that is, what are the target rate probabilities indicating about each meeting's likelihood for a cut? This is why equities have been shaky. Take a look at this March right here, this March view of the target rate probabilities. You know why I love this data? Because somebody, a trader or an investor, whomever, has to take their money and open a trade in the Fed Fund futures contract. So this isn't just analysis and someone, zooming into financial TV saying, this is what I think. Two words we need to take out of our vocabulary for 2024. They're actually insidious and they're terrible. Think and feel, right? Think and feel. Well, we talk about that in the Sector Secrets Mastery Room all the time, and I hope that's something that everyone's been adopting. We trade what we see, right? Now, if you're a fan, how many of you are a fan of Malcolm Gladwell's books? They're good. They're just like reading a bag of potato chips. They just flip through the pages before you know it, the book is done. And in his book, Blink, it's very interesting the way all the things that our eyes are trained to see, right? All the things that we kind of know, but we want to take the emotion out of it. Blink is a very good understanding of what we want to do as traders. We train our eyes to see what is happening. Trade what we see, not what we think, not what we feel. Last time I checked, my lower intestines can't place a trade. All right. Yeah, I love his books too. And I think Blink is a really interesting one for traders because it's not about necessarily ignoring everything you know and everything your brain's been processing, but it's about taking the emotion out of it. Or as I like to call it, money numb, right? Money changes the emotion. Emotions change the way in which we can execute our trading plan. So trade what we see, not what we think. And if we look at this, trading what we see, do you see how the 500, that center column, is starting to come up even with the hold? This is not the way the March meeting looked even just 3 days ago. And what's happening is the expectations for cuts are not no, right? It's not going to happen. It's just less likely. And bond yields and currencies and indices have to respond to this. And if March starts to be the first domino that falls where maybe we don't get a cut, May, June, and July also have to align. So that's where we are. Now, realize that this could change at a moment's notice with any one of our Fed speakers, and more especially any of the inflation data, think PCE, CPI, and jobs data, primarily JOLTS and non-farm. And if we can continue to focus on that, those catalysts affecting this measure, we can trade what we think. No, right? Trade what we feel. No, we can trade what we see, right? Okay, so let's get to it. This is where we sit right now. Think about Malcolm Gladwell, Blink. I think that's a great book. That'd be a good one to have for That'd be a great one to have for one of our book club. All right, so let's get into, as always, the questions. If you have any, feel free to type them on in. I see a few popping up already. And here we go. Delta Impressa asks, in the recent zones to watch video, did I mean that I have been working on improving the momentum and trend indicator? Right. So many of you know we've had this momentum and trend indicator out there for a very long time, whether that be the grab candles and all the different tools that, by the way, are based on price, right? And I think it's really important to understand what the ingredients are of the indicators you're using. And what my question is how can I better have a more accurate read on whether or not I want to be aggressive or a little bit less aggressive on entries, and therefore which one of my automated trigger zones I want to focus on. And yeah, I'm always, I don't know how many of you know, we kind of endearingly call it Raghee Labs around here. And something is always, I'm always asking myself, how much better could something be? And then once something goes through the rigors of 9, 10, 12, 16 months of quite literally trying to disprove the hypothesis, at that point we say, okay, this is working. And yeah, I'm at that point now where Delta, I'm really looking at, for the first time probably in 2.5 decades, right? Thinking there is a way in which I have to respond to the modern markets. And trading 2 and 3 decades ago was a very different thing than trading now. And we have to respond to that and find better, more accurate ways to enter our trades and, frankly, reduce drawdown. And that's what we've been working on here at HQ for almost a year now. So yes, we absolutely have. All right, next up is, can I explain why gold is going up? Megawatt, I haven't looked a lot at gold lately, but I'll tell you this. We don't even have to know specific to right now, and I don't actually see gold going up, to be quite frank. So the time frame matters, right? The time frame we're looking at matters a lot. Gold has generally been very choppy. The momentum's been bearish. You see that there, gang? Look at the top row of the colors here. And the history of the behavior is really important. So I take a look at the current bearish momentum, and I take a look at the current neutral trend. So this is really not going much higher, much lower, but I would generally call it trading in the bullish hemisphere. All right, so it looks like it's heading to new all-time highs. I'm not seeing that either, my friends. So we're not there. All-time highs are still fairly about 100 points away, right? Plus, however, gold moves for basically one reason and one reason alone. It is not a flight to safety, although that is repeated so often, people think it is. Sadly, the way gold moves is in response to something called real yields or real interest rates. And that's the nominal yield of a bond, usually say a shorter term duration, 1 year, and versus the rate of inflation. When that chasm widens and narrows, that's what affects gold. So you look at the nominal yield of a bond minus the rate of inflation, and that is the real yield. And that's why gold moves. So in a lot of ways, you can look at bonds, you can look at notes and say, all right, generally, those should be moving ideally together. And that's the way that I look at gold when it's behaving in the best, most predictable manner, when it's really in sync with what's going on with bonds and really what's going on with real yields. All right, next up, how would I trade heating oil? Al, I can't tell you the last time I traded HO. However, let's do this. Let me show you. I don't have any skin in this game. I've been mostly focused a little bit more on natural gas and a little bit more on crude oil. However, I'm happy to take a look at heating oil because heating oil, more so than I would say most energies, are really very much going to be a bit of, and let me see if I can find a good heating oil. Well, let's just look at heat, right? And if I step back and look at the seasonal for heating oil, as we, and take a look at this, this is the last 10 years of heating oil. Heating oil is very, very much keyed into, let me go back to that heating oil chart. Heating oil is very much keyed into the winter run-up. But do we buy heating oil in winter? No. seasonals are interesting. When we think about, for example, summer driving season and gasoline demand, that kicks off actually in March, April for the June demand, for the July demand. The same thing happens with things that are winter demand. They don't kick in October, November. In fact, that's where they, as you can see here, start to sell off because the ramp up is usually going to start in August. The second push for winter is going to be mid to late January. And I know here in South Florida, some of our harsher cold weather is usually February, January. But think about when the demand kicks in, and we're at obviously the tail end of that. So the next push that I would look for, if you're looking for heating oil, is look for a long setup that coincides with, I would say, lows, say a bottoming pattern, maybe a 1, 2, 3, maybe a double bottom, maybe an oversold stochastic and a Darvis automated support level. I would say do that as we are winding down January for that next push into early March. That would be the setup based on price or price patterns and the seasonal expectation. All right. Next up, Candace asks, what are my thoughts on TTD? Well, let's see if we can formulate some. I haven't been looking at this chart. So we take a look. Here's what's really cool. I haven't looked at TTD in a very long time, probably not since early summer. So it's been a minute. Ultimately, am I having internet issues? Bot? I don't think so. I don't think so. The audio is not great. Yeah, I don't think so. I don't think we should be having any internet, but we'll check that. I'll restart. My sound is staticky. Does anyone have any sound issues in YouTube? I'm just curious if it's the room. My YouTube folks, how's the sound? Just out of curiosity. Thank you. I'm working out of 2 different offices, so it's been a little scratchy in the YouTube as well. Okay, good to know. Good to know. All right, that's a little strange, but I will definitely check, making sure that it's not. Yeah, it's a little breaking up. All right. Okay. All right. So yeah, sorry about that, gang. I will check that before I hop into the rooms. No doubt. We'll make sure we get to the bottom of that. Usually, I like to pride myself on really good audio. I've got a mic boom. I've got a suspension. Yeah, so little weird. Yeah, that could be strange. Okay. I'll check the gain a little bit later on. All right, back to our regular scheduled programming. Thank you, gang, for the feedback. All right. So TTD. Here's what's really cool. I don't have to be looking at TTD every day. What I want to do is remember that by automating the indicators for support, resistance, the underlying momentum, trend, even sentiment, I can take a look at a stock, an ETF, a futures contract that maybe I haven't looked at in a week or longer, and I can get an instant read on what's happening. What's happening with TTD is really simple. We are in the bearish hemisphere, Candace, so I would be aware of around the 70 to 71.5 level for resistance, but we are oversold in a neutral environment. Take a look, gang. Oversold in a neutral trend, a neutral environment, and that's where the oversold, overbought, say a stochastic and oscillating indicator is going to be most effective. So I see my neutral trend, and then I can see my support in the Darvis. All right, the last step is to look at the stochastic. Our indicator should not be the reason we get in. The indicator's job is to confirm whether or not we should get in. So when I look at something like a stochastic, that's the last thing. I see the neutral trend, I see the Darvis, here is the low, and now I look at the stochastic. A lot of people think the indicator is the reason to get in and get out. They are not. Indicators will always lag price, gang. I don't care what anybody tells you. If it needs price, it can't lead price, right? Keep that in mind. So we don't want to delude ourselves to thinking something leads. However, it's okay. What it can do is very valuable, and it can confirm. And that's what we want to use it for. So let the price come down to support. Neutral environment validates the use of a slow stochastic. There's my signal. I would look for something long, Candace, as long as the low from yesterday's session holds. Okay? All right, next up, what am I feeling in what are my feelings? I have no feelings about the market, Richard. What is my thinking? I try not to do that either. What are we seeing, right? About Boeing. Yeah. So my two, I like the sense of humor there, Richard. So what am I seeing in Boeing? Leave it alone. Leave it alone. However, if there's a reason for being bullish, if there's a reason to believe that the worst of the news around Boeing is done, then the low from the 16th, which was 199.50, will hold. And that's a minor low. By the way, yesterday we had an inside candle. Another good reason to possibly expect a pause. Neutral environment, oversold stochastic. Again, a stochastic is built into almost every platform that I've ever looked at. It's a slow stochastic, but here's the thing. Slow it down. This is what I've been doing for 25 plus years. Slow it down. Take a slow stochastic, set it on an exponential, 21K, 3D, listen to me now, believe me later, and it's going to work fantastic when we're in a non-trending environment. So I would say if we're going to get that, Richard, what I'm seeing is that as long as that 199 area holds, and ideally we can take out the high at 206.30. In this environment, this is probably as good a shot as any for Boeing to confirm some bullish momentum. But please be careful, because obviously so much of what's happening in Boeing is not price and technical or even fundamental driven. It's news, it's panic. And news has a way of coming out in a way where, sure, I might have a nice oversold buy setup, but what if we get another bad piece of news? The news is going to eclipse whatever's happening with this oversold price pattern. All right, next up is, what do I see as the next resistant point on Apple? Apple's been a funky one, hasn't it, Matt? Apple, when I take a look at the Magnificent Seven, would follow the path of the sort of not so magnificent. Resistance is, and this is where, if you're looking for some automated support and resistance, we've been the Darvis 2.0 is the free version that we've been giving away here at Simpler for I think since 2016. If you're looking for automated support and resistance, it's out there. You can use this on TradingView. If you're in one of our memberships, we make this freely available. And so the resistance, take a look, Matt. I'm just going to let the objective process, I'm going to let my indicator tell me that, hey, Rag, you programmed me to look for certain criteria. That criteria is being met. It's about 187. So that's going to be resistance. But be really careful with Apple. I think there are better stocks to buy. And if you're looking for a short, I'd be careful, because NASDAQ's generally pretty strong. It took off long in the 200. Right. Yes. Once we were able to break that 200, right, that sentiment read, absolutely. Great point, Matt. If we come back on down to 178, 179, it's hard not to want to look at that Darvis, automated Darvis. Maybe you look for a minor low, and that zone between the automated Darvis support and that 200 propulsion. That would be a great spot to start thinking about if you want to take a long. Now, if the other Magnificent Seven, if the XLK and NASDAQ can move higher, this would be a boat that would benefit from a rising tide, right? Okay. Merck, is it of interest? Let me show y'all something that's really important when it comes to building a watch list. And this is as good a place as any to wrap up our conversation. I'm going to take y'all over to what we call the, this is a flexi grid, by the way. And this particular layout gives me the XLV healthcare ETF in the upper left-hand corner. And then the rest of the boxes, you can see here, are populated by the heavily weighted stocks. So is Merck of interest? Not only yes to Merck, but Johnson & Johnson, Lilly, Merck, AbbVie, Thermo, Abbott, and Amgen. How easy is that? You want to find a way to look at relative performers, or as I like to say, trade this, not that, right? We did it. We've done a couple episodes of trade this, not that over the last year. We want to look at trade this, not that. This is a great way to understand it. What is the momentum? What is the trend? And remember, gang, I don't want to look at trend without momentum, and I don't want to look at momentum without trend. Trend is far more important than momentum. But if I have both of them in agreement, far better follow through. So there's your view of the stocks we'd want to look at within the healthcare sector. So it's not just Merck. It's any of these that have green momentum and green trend. All right. As always, gang, thank you for being here for Charts and Coffee. I'll see you all in the Sector Secrets Mastery. And then I will be in the Simpler Central room at 10:30. Okay? I'll talk with you soon. Be good to each other.